Hey there, Ed McCormack here, founder of the crypto education platform, Dchained. It's been 2 weeks since Ethereum released its highly anticipated and also highly controversial upgrade on August 5th. And since that time, the price of Ethereum and projects built on Ethereum have skyrocketed. In today's video, we're going to talk a little bit about what has been happening since August 5th that's led these prices to go way up, and ultimately what it means for you in the coming months and years ahead. So with any further ado, let's get started. So let's begin by talking a little bit about what this upgrade is all about. And little disclaimer, we're not going to jump deep into the technicals. We have another video that we've uploaded on YouTube that dives into step by step what is involved on the back end. And I encourage you, if you're interested, go check that out. What we're going to focus more on, though, is how this move from proof of work to proof of stake has introduced a massive economic upgrade. And in saying that, I want you to think about a trade that you may have done on Uniswap, SushiSwap, 1inch, any other decentralized exchanges that are built on Ethereum. And think about, have you come across a time where the fees have gotten into the hundreds of dollars, or it's taken a long time for your transaction to go through? The reason is that, for one, the network was highly congested, and Ethereum needed a way to address that scalability by opening up the opportunities to add transactions to the blockchain and moving that from the bottleneck of having to go through miners to opening it up to thousands of platforms out there that can now run servers. Again, I'm going to end the technical side there. But it also addressed this upgrade, the fee situation, and more so, having a standardized fee that makes the cost of doing a transaction not only more predictable, but also introduces a portion of that fee now getting burned. And why that's interesting is that when a portion of that standardized fee that's paid to the individuals adding transactions to Ethereum, when that gets taken out, it gets removed from circulation forever. And whenever you have a supply that decreases, but the demand either stays the same or goes up, inevitably the price goes up. And that is a scenario that we are starting to see now. Now, with that being said, we're only in step 1 of 3 of having this migration fully convert over 100%. We're still operating with a large portion of transactions running through miners. And the reason is that we need to see this platform slowly get rolled out in the coming months through the end of 2021 to work out any scenarios of bugs before the switch is flipped and everything goes over to proof of stake. And as we operate in the proof of work model, with proof of stake, we're still seeing where roughly 2 ETH are produced for every single block that's added to the blockchain. It's the model that was created way back when Ethereum was rolled out. It's a way of incentivizing people for doing the work of actually verifying the transaction and then adding it to the blockchain. But what gets interesting is that this new standard, and it's called EIP 1559, is actually leading to roughly a third of the issuance actually getting taken off the table. Meaning on August 4th, the day before the upgrade was rolled out, 2 ETH was produced for every block. But since August 5th, 0.7 ETH are burned at the same time. So you have a reduction in new ETHs being put out there by 36%, which, when you look at the fact that we are only going to see the issuance number decrease significantly, ultimately hitting its pinnacle in February of 2022, where when we make that next step, which is step 2, called the merger, from the state that we're in today, where we're operating sort of a half and half, to 100% proof of stake, when we make that move, the number of ETH will actually decrease by an exponent of 3, meaning where you have 15,000 ETH produced every day, it goes down to 1.5 thousand. But what gets exciting is that the number of transactions that are occurring not only go up because it gets cheaper, but you're also expecting to see that the number of ETH that's removed from supply will actually far outpace all of those new issuances. And that creates a deflationary asset, which is really, really, really exciting. And it's something that, I really wanted to stress. Can't say the word really enough, because when everyone looks at Bitcoin and really the value that people take out, it really is tied to this idea of Bitcoin having a hard cap. 22 million Bitcoin will ever be produced. And there's so many correlations that are drawn between Bitcoin and precious metals like gold, because you can't make more gold. But there's a better model. If you now have a scenario where after every transaction, after every block, after every second, that supply starts to dwindle. And that will go on in perpetuity. And that creates a lot of buying pressure inherently just from the ecosystem itself, not just people trying to buy, on all these exchanges. And this is where things get really interesting for you, because you not only have the benefit of buying in, quite frankly, pretty cheap right now, because all these buying pressures in effect are going to impact the price more and more as we get closer to February. But we're also seeing a scenario where this new upgrade has also kickstarted all these new platforms that are rolling out staking opportunities. And this is creating a scenario where more ETH is getting taken out of circulation and put into smart contracts in order to earn interest. But also for you, this is a way for you to also be able to hold your ETH, buy it in cheap, and then earn a little something. If you don't have plans to sell anytime soon, a 5% interest rate, which is what Coinbase is expected to roll out when it introduces its new staking program very soon, that adds up pretty quickly. So we're seeing the combination of fees actually now getting burned and removing ETH from circulation, combined with staking, where people are actually taking their holdings and putting it and taking it out of circulation and putting it into a smart contract, combined with the fact that with Ethereum becoming a lot more cost efficient, it's also creating a scenario where the projects are actually benefiting at a multiple of Ethereum. And to put this into sort of a visual, if you look at, since August 5th, Ethereum has gone up into the double digits. But the fact is that the decentralized exchanges that operate on Ethereum have actually outperformed. And the reason is that as we see, as time goes on, Ethereum will get more inflows of money. But people will start to say, well, if I can move my money now to these platforms that are facilitating the transactions and have lower market caps, I might see a better return on investment. And we cover this actually in our video regarding alt season, where the money flows from the biggest of the big, so Bitcoin, down to Ethereum, then to the next level of large cap, then to mid cap, then to small cap. And along the way, you ultimately have multiples of ROI, where if you get a 2x on Ethereum, you might see a 5x on Aave and SushiSwap and Compound, maybe a 10x on 1inch, and so on and so forth and so on. And that is where big, huge opportunities start to kick off. And why this is exciting is that when you look at, the buying pressures that are being created by this upgrade, combined with the fact that people are putting more money into, decentralized exchanges to do more transactions. Finally, the fact that most of the projects right now that are burning are actually NFTs, which is a whole nother topic of discussion, because when we were all doing our analysis, the developer community, the analyst community, everyone was looking at DeFi as the source of increase in volume to burn all of this ETH. NFTs really were not factored in any material way into that equation. And now that we see NFTs introducing high volumes, and behind them we see gaming, and behind them we see data and privacy, we might see the overall rate of burns actually outpace the issuance of Ethereum way before February. And this creates a scenario where we have a perfect storm on our hands. We have a decreasing supply. We have an opportunity to benefit by investing on the platforms built on Ethereum, because we know that with alt season, and I envision that we're very close to the heart of it, more money starts to flow down to the smaller cap projects and ultimately gets you a much better ROI. And on top of that, the platforms that are actually seeing the highest volumes and doing the most burns aren't the DeFi platforms everyone thought. DeFi platforms are skyrocketing in terms of new user and trading volume, but it's the NFTs. And we have these new sectors that are helping to expedite and ultimately make your ROI exponentially greater. And this is where things get super exciting. And if you are watching this video, you should feel really bullish about the market that we're in today, and ultimately the opportunity where investors who might be sitting on the sidelines in traditional markets, because August and September are a somewhat slow time in the stocks, might be moving their money into crypto. And as we've seen in the past, especially around alt seasons, when the money comes in, it usually stays. So I hope you found this video helpful. If you did, please subscribe to this channel and pound that like button. And please tell your friends and family. We're always looking to grow the Dchained community. So until next time, happy and safe investing. I'll speak with you soon.